Welcome back to Making Money Matter, coming to you from the IMARC conference at the ICC in Sydney. And I've managed to nab Jake Klein. He's the executive chairman of Evolution Mining. The ASX code is EVN, and they are gold, copper in Australia and overseas. And yesterday, Jake, you and I were at the Gold Industry Group, only yesterday.
We were.
Gold Industry Group breakfast, where we were talking about gold and technology, which is great to talk about some of those things. But overnight, the gold price has risen again, so we're now well over 4,000. I know one of your concerns when the price of gold starts to get strong, which it is, are we good custodians of capital? What's your concern?
I think the answer to that is history has shown us no. But before I get to that, Kerry, I just want to celebrate the gold price going above $4,000.
Absolutely,
because
let's celebrate.
I think people don't recognize that I started in the sector 30 years ago.
Wow.
And the iron ore price has gone up 4 times since then.
Yep.
Copper as well, about 4 times, but gold 7 times. So gold has actually been a much better performer in terms of price appreciation than other commodities. And I think that's often overlooked.
Why do you think that is? Why do you think it's overlooked?
I think investors have been more driven to, the supply and demand story that an iron ore thematic can deliver. The emergence of China, and we can talk about that a bit later, as this customer, and iron ore has also had a massive volume growth. So 30 years ago, $25 a ton for iron ore, but selling about 120 million tons in Australia.
Yep.
And today it's $100 a ton roughly, but we're selling close to 1 billion tons. So there's been this massive volume change, which means that from a revenue perspective, it's up 33 times, which is phenomenal.
Yeah.
Gold hasn't had that volume growth, but it's had the price
growth. Yep. So people are just not, are people still not understanding gold, do you think?
Well, let's go back to the custodians of capital.
Okay.
Because I think that is part of this story.
Okay.
Of why aren't people more interested and excited about this gold price going? So I think partly because this gold price rise is probably a little different to others. I think you're seeing big central bank buying, non-Western central bank buying. China has long said it doesn't want the US dollar to be the reserve currency of the world forever. So we should believe that. And part of their solution may be diversification away from the US dollar and into gold and other things.
And I think they're already doing that.
Which is what they're already doing. You've got sanctions on Russia, and maybe there's more buying in from the Russian central bank. Clearly, there is a separation and divergence between what you describe as Western aligned countries and non-Western aligned countries today. It's often talked about the axis of China, Russia, Iran, and North Korea. So that's probably, in my view, where some of the demand for the gold price, gold has come from, and therefore the appreciation. So that should flow on to gold investors getting really excited about gold companies like Evolution. And our share price has appreciated a lot.
I know. But
it has not appreciated to the level where it was when COVID broke out. And I think you saw a lot of Western investors saying, well, we want to get to safe haven assets, gold companies operate. So I think it has a long way to go to catch up to the gold price, gold companies.
Okay, so again, I go back to, I was talking to somebody just yesterday, actually a lady from China, and I said to her, what are you thinking about gold? She said, I think it's too expensive. And I said to her, against what? Against what? Because an ounce of gold is an ounce of gold. And I think a lot of people are seeing this appreciation in the gold price, and they think they've missed the boat, so to speak. And I say, I still think that it has a long way to go. It's just playing catch up. And if you look at it in percentage terms, it's not that much. But I also think there's opportunities in equities. And I just don't, the majority of people just don't get that.
I agree with that. I mean, gold is demonstrating its store of value.
Yep.
Value. And what has made gold that risk asset or asset that people go to when risk is on, and risk is definitely on. I don't want to depress you too much, but everyone talks about the cost of housing in Australia and the price of housing. I think it's gone up several times. Let's just call it 7 times roughly in the last 30 years, because that's exactly what someone said to me. If you look at houses in Sydney, 7 times higher over 30 years. But hey, that's a correlation to the gold price. And so the number of ounces 30 years ago that you could have bought a property in Sydney is about the same as it is today. And that's because there's been such an erosion of value of the Australian dollar and US dollar and other fiat currencies.
Every currency, because governments around the world, and I've mentioned it to our audience many times over, that governments are out of control. The only way that they can get themselves out of the trouble they're in is to continue to print, to repay the debt. And they're going to inflate themselves out of trouble. And what happens? That's when gold really comes into its own.
So I think the gold price has a long way to go still. There are good reasons to believe why it's going to go higher. But I want to pivot back to gold companies, because in this custodian of capital piece, which I think investors have been frustrated with some good reason over the last rallies in the gold price, and over the time I've been in the gold industry, there have been several. Gold companies tend to lose their discipline. They tend to allocate capital and bring forward projects and then not control them very well. If you think about an NPV model and a spreadsheet, and you're solving for net present value, it always seems to look better and increase your net present value if you bring forward your capital and you spend more, you increase your gold production early on, and you monetize that gold quickly. That is not a good business approach. Because it causes companies to lose their discipline, to spend too much, and then often the delivery isn't there.
When you say the delivery isn't there, is it because, what do you mean by that? The physical delivery of the gold, or the delivery of the outcomes? Or
I think in a higher gold price environment, there's a sense of optimism. There's a sense of a desire to do things quicker, so they're not done that well, and then things cost more. The studies and the basis on which you made the decision to invest proves to be less robust than you would have liked, and therefore you see an increase in capital costs, you see an increase in operating costs, and that squeezes the margin that you should have delivered to shareholders.
So what is Jake Klein and the Evolution team doing at the moment to control that over exuberance with this extra strength in the gold price?
So we're very clear that any dollar the gold price goes up needs to be banked and converted into dollar in the bank accounts. It cannot be spent. So our plans are what they were established at the beginning of this year, our budget. We're not deviating from our budget, even though we're making more money. The gold price is $700 to $800 higher than our planned price. So success for Evolution means taking that $700 for every ounce we produce around 750,000 ounces of gold, and seeing it in the bank at the end of this financial year.
What about in a dividend to shareholders?
That could be, but it has to first get into the bank before
of course.
it can go to shareholders.
Yes. But I guess some of the things that people look for, investors, and I'm an investor, and I always say, all right, comes a certain time where you do want to say, okay, I'm investing in the company, but I would like a return on my investment.
And I think gold companies have been very poor at that. We've had a bias towards thinking we can spend your money better than you can.
Correct.
So we've decided to go on these growth expeditions or acquisitions, when really an investor would be happier if we gave it back to you and you could then decide what you did with your money.
Either buy more shares in the company or take the cash for living expenses. But I think that that's so important. Do you think that's going to change?
I hope so. Albeit, with the line of investment bankers we now have knocking on the door saying, we've got a great deal for you. Everyone gets enthusiastic. Even the tone of some of our conversations with investors recently has changed from, okay, we really like what you're doing, operational discipline. And that's the bulk of our share register, and owners of the business are saying, we just want to see more of that. But you are starting to have more conversations about, okay, well, the company's in great shape. What are you going to do next to grow it?
Yes.
And I think that's a dangerous conversation.
Really? Why is that? Because that's a question that I would ask you. which is where's the company growth and the shareholder value going to come from going forward? Why is that a dangerous question?
Because if you think about a cyclical industry like gold is,
Okay.
the gold price is high now. Hopefully it will go higher. But that's not my decision as a company leader to make, that we're going to make investments on the basis that the gold price is going to go higher. That's your decision as an investor to decide that you want exposure to a gold company that mines gold. Our decision needs to be, what can we get the best return on capital for every dollar we spend?
Got it. Okay.
So sometimes in an environment like this, $4,200 gold price, things aren't cheap.
Yeah. Because everything else is going up.
Because everything else is going up. You know, why is it good for you as a shareholder for me to go to another company and say, you know what, Kerry's happy to pay $1 for your stock at the moment, but we're prepared to give you a premium of 30%. So here's $1.30 for your shares.
Yes.
Who's better off in that environment? I think it's the seller rather than the buyer.
Yeah, 100%.
So we like to find situations, and our history has shown, when the gold price is down, when there's a motivated seller, there's some distress around the situation, maybe strategic, maybe balance sheet. When there's a motivated seller, that's when you get the best deals.
And that's when you like to go in and have a look at those. Don't pay over, don't pay the premium.
Yeah.
Make sure you look at those potentially distressed assets. Let's talk about some of the assets for Evolution, because it's not just gold, you've got some copper assets as well. So let's talk about where you are and let's take them one by one, if you like.
So Evolution started in 2011.
Yep.
When we formed the company, we did this merger, three-way merger with Catalpa and Newcrest. So there is only one asset left in the portfolio of 5 that we started with. That's Mount Rawdon.
Is that right? Is that the last one left?
Yeah.
Wow.
That is coming to the end of its life as a gold mine, and we're going to convert that into a pumped hydro storage facility. And we're working hard on that. It's a very big infrastructure project. Evolution won't build it, but we think taking it through to the end of a feasibility study, working with our partner, ICA Partners, will deliver some value to Evolution. And what a unique way of closing a gold mine that's been going for 25 years to turn it into a renewable infrastructure asset with an 80-year mine life. I just think will be an unbelievable
what a great story.
Advertisement for the mining industry.
Yeah, and that's what I often say to our audience out there as well. Look, the mining industry is not there to tear up the ground and leave it in bad condition. And this is a perfect example of what is possible.
So that's the last asset from the original 5.
Okay.
Then let's go to the assets in sequence. So in 2050, Barrick was, sorry, let me retrace. There was one deal before that. So La Mancha, which owned the Mangari operation, and La Mancha was predominantly owned by Naguib Sawiris. He owned 100% of the company. They had only Mangari, and we did a deal with La Mancha that allowed them to become a shareholder of, I think they owned 31% of the company, and we acquired the Mangari asset. But one of the rationales for doing that deal was not only putting ourselves into Kalgoorlie, which is a great mining district, but also Naguib wanted to really, he shared our vision of growing a really globally relevant gold company. And he agreed to fund us for the next acquisition and cornerstone any equity raise with $100 million.
Nice.
So just finishing off on Mangari, we've consolidated the ground position. We bought the Kundana and East Kundana joint venture from Northern Star. We're currently spending $250 million on that asset to upgrade it from around 130,000 ounces of gold production a year to 200,000 ounces a year. And with the 1,000 square kilometers of ground, we have a mine life of at least 15 years ahead of us. Completion of that plant will finish in the first quarter of 2026.
Okay, so that one is going from 130K a year, 130,000 to 200,000. That's a big uplift.
It is, and it's because we established ourselves in the district, we consolidated the district, we understand the geology, and now we're spending that increase, that $250 million to increase the plant capacity.
Okay, and that will increase will happen in 2026. So another just over a year away.
So that journey started in 2015. It's taken us 9 years, and we have 15 years at least in front of us.
Okay, so that's a tip.
So let's go to Cal.
Yep.
Because then Naguib Sawiris was 31% owner of Evolution. He'd agreed to cornerstone the next equity raise, and we knew we needed Cal because it was being sold by Barrick. They'd strategically decided to exit Australia, but this is an incredible endowment. But in Barrick's portfolio, they were modeling 4 more years of mining, so closing in 2020, and then processing low-grade stockpiles until 2024. So Cal was due to close this year. We bought it. It had a higher market. The price was higher than our market cap at the time.
The price you bought it for?
It was higher than our market cap. So
$700
million. We did it.
That's right. I remember
but we knew
that.
we needed to get an asset which is really, truly tier one. Remembering Mungari hadn't yet been consolidated and everything else. So, the journey at Cal has been discovery. We've discovered a whole underground system. We've done several additional cutbacks. So the future of Cal is now firmly out to 2040, at least 17-year mine life. But it was producing around 225,000 ounces, 230,000 ounces of Cal. We've taken it up to over 300,000 ounces, the addition of the underground mine. And there's the additional open cuts and open cutbacks. That'll be at least a 17-year mine life. And if you've looked at our quarterly report, we've had additional drilling intersections in new areas that hadn't yet been identified previously. So the story of Cal is nowhere near finished.
Do Barrick still keep an eye on you, what you're doing there, and scratch their heads? What's your all-in sustaining costs out there?
I think it's about 17 Australian dollars.
Well, that's a nice difference between a 4,200, but again, still good custodians. All right.
So let's move to what I think has been one of our equally and maybe most interesting acquisitions, which was Ernest Henry.
Oh, yeah.
So that was 2016. Glencore were having a real existential debt crisis. Their stock price is about, I think, 20% of what it is today. They were under real pressure from their bankers.
Absolutely.
They didn't want to sell copper assets or core assets. So we went to them with an interesting structure that said, well, why don't you sell us the gold at Ernest Henry and 30% of the copper? We'll give you this big payment of $880 million up front.
Yep.
And we'll pay 30% of the costs going forward. That was great. It was meant to close in 2026.
That mine.
Ernest Henry. Yeah.
Yep.
Glencore decided now it was really they operated it really well. But by 2021, it wasn't big enough because we owned 30% of the copper. And they were interested in Africa. It's a 75,000 tons of copper a year. So it's 50,000 tons for them, wasn't very much. So we approached them and said, well, why don't you sell us the whole of Ernest Henry, which we did. So we now own 100% of Ernest Henry. Right. The drilling there is just demonstrating the world-class nature of this deposit. Okay. So just in context, we paid $1.9 billion if you take the two payments. Deals. Yep. It's all been repaid.
Is that right?
And it's all been repaid at lower copper and gold prices.
Wow.
There is at least a mine life out to 2040. And if you're following our exploration updates, we've discovered this ore body called Birds.
Yeah, saw that.
We have yet to find the limit of depth extension of the ore body, and it is just proving to be an incredibly good exploration deposit.
In terms of the gold and the copper, first of all, is it 50-50? Is it more copper focused up there?
It's about 50,000 tons of copper a year and around 75,000 ounces of gold. I think I'm right there.
Okay, so about 50,000 copper, 75 gold.
Yeah.
Still going out to 2040.
Yeah.
How deep have you gone up there?
So at the moment, we're mining at the 1200 level. Okay. And one of the reasons why Glencore were happy to exit in 2021 is below the 1200 level. The deal changed to 50-50. So we were going to get 50% of the copper at that time. And there's additional infrastructure required to move the crushing circuit down to the next level effectively.
It's quite, is it complex geology up there? Or
it's a sub-level cave. So it's, one of the great things I love about copper gold ore bodies is they of bigger, larger scale, and this lends itself to sub-level caving, which has been an incredibly efficient and good way to mine.
All right. Well, we don't have a lot of time, so I want to get on because there's more, ladies and gentlemen. There's more.
Okay, let's move to Red Lake, which is
Over in Canada.
2020. Probably not our finest moments as a gold company, so that's been a struggle.
Yeah.
We like the endowments. We've taken a lot longer. We've had the asset for 4 years now to really understand how to get productivity and mines plan and culture right in Canada. We feel we're there. We've stabilised the operation. It's around 140,000 ounces of gold a year. One of my big challenges when I keep getting asked, Kerry, about would you sell Red Lake? I think there's a high risk that someone else or us may make a big discovery there.
Really?
So it's one
How
of those
interesting.
low districts that it had a high grade zone that made Gold Corp one of the largest gold company in the world. The high grade zone, which was an unbelievable 5 million ounces over a 250-meter strike length at 30 to 40 grams a ton. So
that's gone though.
That's gone.
All
gone,
mined out.
and we're kind of mining much more difficult areas, multiple areas, 140,000 ounces of production a year. But our geologists still think that there's
another one.
There is a risk that if we left
the minute you leave,
if we left this, someone may find it, and that would be really distressing. So we're going to keep going, but we feel we've got it in control. But at the moment, it's an okay operation.
Is it profitable?
With a very long life. It made $28 million last quarter.
Okay,
but
it hasn't paid for itself yet.
It has not.
No. So that's still got a long way to go. All right.
So let's go to North Parks, which was our acquisition in December, owned by CMOC. CMOC clearly had decided that they couldn't buy more assets in Australia, a Chinese company. They pivoted to the Congo, selling this asset. And we try to bid on the gold stream, or we try to acquire an interest in the asset when the gold stream was sold. We couldn't get to the value that Triple Flag did at the time. But we've always thought of North Parks as an outstanding asset to own. It's 500 million tons of mineralization.
Right.
Not all of it in reserves, but it's a huge, huge system. It was owned by Rio, then CMOC. It's got a 30-plus year mine.
Wow. Okay.
Yeah.
What sort of grades are we talking?
It's like 0.4% copper, 0.5% copper. It's got some gold, but we don't own the gold, or a lot of the gold at the moment. We own 80% of the asset because Sumito, who are a very good partner, own 20%.
Right.
And we're making money. We love the asset. And again, very similar to the other assets we bought from majors, which weren't core to their long-term strategy. Not that much exploration had been done on the assets.
So you think that there could be, again, more upside here. But my question for you is, with Sumitomo having 20%, don't you always like to have 100%?
No, Sumitomo are a really good partner.
Are they?
Yeah, they are.
Okay.
They're a great partner.
But this is mainly a copper project.
We're making about 25,000 tons of copper a year from that. So if you combine that with the 50,000 tons from Ernest Henry, it's about 75,000 tons of copper a year for Evolution, which is about 30% of our revenue.
Where are your customers for this?
So CMOC, a subsidiary of theirs, has the offtake contract.
They've got the whole offtake for that. What's your view on copper going forward? We've spoken about gold. We know gold's very strong at the moment. My view is that copper is very important in the future as we transition. What's your view on copper going forward?
It is. I mean, I think there's so much rationale behind this squeeze on supply. I mean, there's no one discovering new copper ore bodies.
Nope.
And the demand is clear as the world transitions to renewables. You just think about Australia and how many thousands of kilometers you need to roll out of, poles and wires. There's copper in those wires.
Yep.
So copper is the commodity of the future, and very positive.
That was North Parks was your last acquisition, am I correct? Any more on the horizon, Jake?
So Gary, let me summarize what we believe, because we bought it when copper and gold weren't really getting the spotlight that they're currently getting. There is a time to do deals and there is a time to make money. And now is a time to make money.
Okay. All right. So focusing in, getting Red Lake sorted, bringing North Arcs up to where you think it could be, continuing exploration. Final word goes to you for people that are my audience listening. From an investor, a shareholder value, sum it up for us as to, I often say this to people, Jake, which is give me 3 reasons why people should sit up and take notice of Evolution right now.
We've put ourselves in a position of having fabulous assets. They all have organic growth opportunities. They're in world-class geological districts. And I don't think you can get better than that. Being in the right position, right jurisdictions with now an operating capacity that matches the quality of our assets.
And watch this space, ladies and gentlemen, because I think that, Red Lake, something in his waters is telling me there could be a discovery out there at some point.
I did not say that, Gary.
You didn't say it, but I'm putting the words in your mouth, Jake. Because what you said was, you said you think there might, if you left, you would hate somebody to find something. That's what you said.
That's right.
So watch this space very carefully. Jake, it's been an absolute pleasure to have you here, and I really appreciate your time. We'll see you again soon.
Thanks.
Back on Making Money Matter or at the Gold Conference.
Thanks.